What's up, guys? Welcome to episode 41 of the Block Exploring podcast. Here with me is Tommy, as always. And in this episode, we're going to talk to you about everything that happened in the crypto space this past week. We're going to go over the bearish sentiment that's been going on in the market. We're going to compare the market right now to March, discuss Evergrande and it defaulting on its loan. And we're going to talk about the 10 million crypto punk that was sold. Now, as always, none of this is financial advice. If you're looking for financial advice, we are not financial advisors. First, get into a state of the market overview, as we always do. Now, I'll just give you the overview in a very quick manner. Everything is down in the top 10. Everything is down in the top 20. And, the biggest gainers at the moment are USD Tether and most stable coins. So if you look at the market, overall, very bearish. A lot of major projects losing over 2 digits in 7 days. 16%, 20% in the negative. A lot of new buyers that bought at the top have been majorly shaken up. And, this has been speculated to be all linked to all the uncertainty that we see in the market right now. We see concerns about the Omicron variant. We're seeing Evergrande defaulting on its loans. We see congressmen talking about how the crypto market is unstable because the crypto coin will be destabilized by Ethereum, will be destabilized by Mongoose coin. So this is all that beautiful, based on nothing kind of FUD that the American government tends to spout. That entire deposition about like cryptocurrencies that we saw gave me very much Zuckerberg deposition in 2017 vibes, where the people deposing the person have no clue about the actual technology. Nonetheless, here we are. A lot of bearish sentiment. Tommy, what's your take here?
Like you've said, it's just been a lot of different factors that may have caused this bearish sentiment at the moment, and it's a very real bearish sentiment. I think if you take a sentiment check, just go on Twitter or talk to some of your people that you know. I generally think you probably get a sense of a lot of uncertainty.
Mhm.
I think we draw a lot of parallels to March of 2021,
Yeah.
when first wave of corona, first wave of lockdown, we saw massive crash in the stock market. Crypto was also down, and that was caused by a mix of things, and that includes these COVID variant announcements, lockdown announcements, or uncertainties. These all lead to market uncertainties, and now that the stock market and crypto move very closely in terms of sentiment, this knock-on effect is really being felt by crypto right now. But also, I think I get a sense that in the crypto space, it was becoming quite frothy right before it went down. When people don't think it'll go down, it tends to go down, and it only takes a hair thin trigger to set it off. And
Yeah.
a lot, well, there was more than that. There was Omicron, there was the US regulatory FUD, there was all kinds of things. So
Yeah.
bearish, but this either poses as a very scary time or a time for opportunity. Really depends on your perspective.
That's true. I read an article published by Forbes which says the current situation right now in the crypto space resembles very closely what happened in March 2020, where like the equities plunged like 5%,
Mm-hmm.
and there was an overall bearish sentiment, and there was kind of this black swan perfect storm idea going around. For me, it was actually very surprising to go on Twitter and see that much actual bearish sentiment, because
Mm-hmm.
people really, even a lot of bullish people, switched up and said, no, this is the start of the bear market. I don't know how I think about that, because as you guys might know and remember from March 2020, that was also the quickest run up that we've seen in crypto in such a long time, as well as this the fact that this dip, or I mean crash, let's call it a crash, had been predicted by a lot of very big players in crypto, and was heavily discussed, and people saw it coming. The sentiment right now is almost a bit of a hyperbole. So if you compare what goes on in March, then you see that there was a dip equal size. If you look at 2017, there were a bunch of 30% dips, and no one, I mean, some people were calling bear market, but some people were saying it needs to dip to go higher. I think it really depends on your perspective here, and I
Mhm.
don't think that you can be certain that this is a bearish market.
Yep. Yeah, I wouldn't be so quick to call it a bearish market, but rather a bearish trend. But
Yeah.
this also just came to mind with in regards to perspectives of I think we approach crypto from a different sort of perspectives, I think, and also and approaches, and I think we follow different people in the space, and maybe
Hmm.
that's reflected in how we are now viewing the situation, where I imagine you might be following a lot more traders than I do, a lot
Hmm.
of people who talk about price action and the tokenomics and as such, where something like a bear market might impact them a lot more, or something that they're much more vocal about, whereas those who are working as in the NFT space as builders, community builders, and this such, maybe people I follow more,
Yeah.
this is this the bear, of course it's not like they're not a part of the bearish market, not that they're not affected by it, they 100% are, but it's the perspective that they approach when in such a bearish trend. I see a lot less I see a lot less fear
Yeah.
in term, and a lot less I'm gonna take a step back from the space, but rather they're ingrained in the space and they're gonna continue building. Bear trend, bull trend, they're about this space, right? And that's the vibe I get off in I get from the sentiment from the people I'm following, but they're
Hmm.
probably very different in terms of approach to the traders that you might follow. I mean, of course we follow both, but just more just to make that
Yeah. Yeah.
example.
Absolutely. And I think what is also interesting is that people aren't taking into account the fact that for a very long time, this Evergrande thing has been kind of looming
Mm,
over all markets because it's such a major player, and now it defaulted on its on one of its interest payments,
yeah.
and another large group called Kaisa
Hmm.
defaulted on a $400 million bond. A lot of this stuff was looming for a very long time, and as I was saying, this dip was accurately predicted by so many people, and the same people have been saying, yeah, this major dip will happen, but a major correction is also inbound
Hmm.
after that. And a lot of people are saying it's a short term thing, it's not a long term, it won't set off the market to such a degree. Now,
Hmm.
you see that the moving average of Bitcoin in the past, I think it's like 20 weeks or something like that, has been like breached, and it's been going down, so it set in a bearish trend. But overall, I think that it's very reasonable to make an estimate that this is merely a large dip, and that all this bearish sentiment is more of a, I don't know, it's more of a, I
I
feel like
mean,
it's more of the mainstream, um
extrapolation, the
yeah.
exploding of the actual sentiment.
Yeah, I feel like it's
That's an
a
interesting
lot
point.
of people kind of hyping each other up, because if we look at what actually is going on in from a more isolated perspective within the crypto market, it's still being heavily used.
Yeah.
We're at relative to last year still at major highs.
Hmm.
A $10 million crypto punk has been bought. I think it was yesterday.
Yeah,
The
ten point
amount of
two
actual
million.
use, yeah, the actual use is still crazy.
Hmm. Exactly.
So.
It's still being utilized. And I think that's a good point, is that we're in a completely different place as an industry
Mhm.
from March of 2021. We are miles ahead of where the space has progressed so much in terms of bringing people in terms of mainstream recognition, in terms of understanding, people understanding what they can do with crypto. And if they don't understand, they're still using crypto,
Mhm.
right? Just more and more people just getting into the space. And it's of course with new people in the space, in the short term it might be a little volatile because people are scared, they don't know what they're doing, buying high, selling low, selling high, selling low, doing all kinds of things.
Mhm.
But there are people using this. It's RL, the L1s in this space, they're congested for the
Yeah.
most part. ETH is still congested. Other chains are also being loaded up with new users and things, and people are building so heavily in the space. And that's what I'm saying, that despite this bearish trend, there's an overwhelming feeling of building. People are building and people are growing in the space, and that there's still so much opportunity to be had, and that not only that we're early. we're early.
get where you're coming from.
Mm-hmm.
I feel like if the belief really is that the market is going to crash and stuff, that no one would be buying non-fungible assets, right? Because you want to sell off quick, you want to be able to get in and out, you want to have an easy access point.
Mm-hmm.
But that's not the case for NFTs because they're
Mm-hmm.
non-fungible. So the only I can see two reasons. This person bought the CryptoPunk thinking, "Wow, this is a dip. It's not the biggest deal." Or maybe the person sold off high and then sold to himself in order to reset his capital gains tax.
Mm-hmm.
But at the same time, that was checked by a lot of community members. Like, is this just
Mm-hmm.
price inflation in NFTs, like
Yeah.
artificial price inflation? It wasn't the case because the wallet address was up to completely different things in completely different projects,
Mm-hmm.
and then decided to buy this punk. So overall, it's just a very interesting time to be in, and I think that the mainstream way of thinking, like, oh, all the external factors that affect crypto are of massive importance. I don't think you can. I think, yeah, that's the case for the investors who are in everything. So in crypto, in ETFs, they're trading funds, they're trading stock options, all this
Mm-hmm.
kind of stuff. That's the case for them because they see it all as investment goods.
Yep.
Uh, what about for the more crypto native, for the I think the, let's call it the crypto investor? I don't think that this is seen as a bear market. I think it's seen as a
Mm-hmm.
major dip because I feel like the crypto market post COVID boomed to such an extent because people were at home more and had the time to read up on a lot of stuff,
Mm-hmm.
catch up with the crypto market, catch up why it's relevant.
Mm-hmm.
We saw the entire NFT boom. I think that there's a major difference between seeing the crypto market as any other market
Mm-hmm.
and saying, oh, if Evergrande defaults,
Right. This is gonna
crypto
happen.
market's going to go down. Maybe it's going to go down for a while, but I think at the same time, let's say Evergrande goes down, defaults on its loan, that's once again a manifestation of poor financial management
Mm-hmm.
in very large corporations, governmental institutions, etc., that will reduce the trust a lot of people have in those services, in fiat currency, and
Mm-hmm.
that will inevitably bleed back into crypto.
Right. And just on the, I think, yeah, those are all relevant points, especially with the, and important things to talk about, especially when we think about how relevant crypto is towards disrupting the traditional financial system.
Hmm.
And on the crypto punk, I think we can't discount that this person could have just bought the crypto punk because they liked it.
Yeah.
But I mean, it can't remove the fact that it naturally man's probably thought, or who he or she probably thought that of course had in mind that this is also a good investment. But I
Hmm.
feel like it could also be in the very same way, you buy a painting as an investment, but you probably like that painting
Yeah.
as well,
Yeah.
right?
Yeah.
But I think it's extremely these dips in the crypto space. I think people should harden themselves to these dips, because more often than not, there are opportunities to build, opportunities to buy low. No financial, not financial advice, but the people who seem to win the most in this space are those who hold for long term, hold reliable, not reliable, but blue chips, or
Hmm.
promising projects over a long term period of time. So that's why it really benefits you to get hardened to these bearish trends, because going against the trend is not like good financial advice, but you want to be ahead of the trend,
Yeah.
which
That's true.
often means not going with it, right?
Hmm.
You don't want to go against it, but you don't want to go ahead of you don't want to go with it. You want to be ahead of it, because that's where you're making moves.
Exactly. And I think that taking that perspective, if you're in this space for the long term,
Hmm.
when there's blood in the streets, it's time to buy, right? And I think a lot of people who are in this space for the next 10 years, they're investing very long term. They're buying now. You see Michael
Yeah.
Saylor do it with his what's it called? Micro
Micro
capital.
strategy.
MicroStrategy, yeah, buying up a lot of Bitcoin at
Hmm.
like 82 million, bought a significant portion of the ongoing liquidity in Bitcoin, and it's just holding it.
CZ from Binance was literally saying, "Don't sell your Bitcoin. Michael Saylor is just gonna buy them up."
Exactly.
Yeah.
So I think with that being said, find out a strategy that works for you. If you're here for the long term, don't be frightened by these kinds of crashes, dips, whatever. And if you want to be in the know on everything that goes on in the crypto markets and in the future of crypto, tune into the Block Exploring podcast. We'll be here every single week, twice a week, Mondays and Thursdays. And we'll see you around. Peace.
Take it easy.